Traders, it is Thursday, the 11th of November. Stay Trading Concepts. My name is Nikolai, and we're going to go over the last couple trading sessions. This is the midweek action, Wednesday and Thursday of this second trading week of November. We'll start with crude oil. We did fade the recent highs at $85 per barrel. And in the beginning of the Wednesday session here in the pre-market, we were somewhat undecisively moving within the overnight range. We were exactly in the middle, and while it appeared that we might have a similar cluster bottom at a higher low, the sellers did take here initiative for just above 84.50 and eventually pressed this market here following the oil report towards lower prices. No opportunities for me here. I usually don't like getting involved in the middle of these runaway progressions unless there's something very compelling. There were certain opportunities, not something that I was interested in. By the end of the session, I saw the market lean parabolically here. You can see the collapse within the latest structure that formed. We did get a poke here below $81 per barrel, and then price reacted sharply and formed these clusters here, shouldering action, very thick, right above the Sunday highs. I decided to pick this one up and give it a chance for a mean reverting move in the beginning of the Thursday session. I did have to carry over the risk here on margin, but that's not a problem. And I did look for just a very conservative, quick 3-to-1 cheap shot, exiting in the middle of this latest structure, just below 81.70. Overnight, there was initially pressure here before the European session to the downside, but the weekly low held and a mean reverting move broke both the coil and the recent high. Then sharp turnaround, and we ended up here just $200 higher than the $80 per barrel mark. In the beginning of today's session, I was eyeing this price action here. We definitely had a bit of a slowdown, and nothing that I really didn't anticipate that this is going to turn so sharply. There was a couple legs here in the attempted follow through. If a third one was offered at a higher low, I likely would have been interested to pick this one up and see a mean reverting move towards the overnight highs. That, however, was not offered, and the market stair-stepped here fairly steeply above 82 bucks. It did lean on the overnight highs, and then another sharp change in direction. What caught my eye here for an opportunity this morning was this strength here, which was very similar through the same price levels, crossing the 82 mark. So I decided that the potential for a mean reverting move is significant, and looking for some type of a structure here to form close to this high so I can fade the rally back towards the lower half of this range. And indeed, the three drives to this shoulder top were offered, so I did pick up the third one here. Very good price, just above $82 per barrel, and I was eyeing here profits somewhere comfortably, probably even a marginally higher low. This market did come around 4 handles or 4-to-1. My $300 stop here was all the way above 82.30, which meant that if we break here this overnight high for a second time with good clearance, I'm likely wrong and I will get stopped out. I was happy to get out along my 3D reference point from the morning, and indeed price stabilized here in a marginal higher low and then faded back again towards the middle of the daily range. You can see that the volatility is pretty much dying down now after 4 o'clock. As far as projecting this idea into Friday, I'm really not certain. This market is volatile and mean reverting, and it could go either way, and it's very likely that the decision, the next directional bias will be chosen from this middle here around 81.50. Moving on to natural gas. Here's my chart. I did pick up, well, first, I guess, going a little bit further back, this market has been fairly weak, did break the $5 mark on lower highs. We did have a few drives to a bottom, which was found around 474, 75. And then what I was eyeing this morning was a potential two-wave pullback, similar formations at the highs, and it seemed like we had one of these same tops here. You can see this one here, very similar to what we had previously, marginally lower highs. It seemed like a rejection at $5, so I did pick up following the break of this curve here. You can see the green arrows building up this parabolic curve. we got a bit of fresh interest here breaking that curve, so I decided to pick up a short on the pendulum pullback right along this curve. Unfortunately, price continued straight up forming a big V-shaped reaction, and even though it didn't violate the $5 mark, that was a little bit too strong for my taste, so I decided to get out safely here. No harm done in the middle of the structure. Indeed, we did stabilize to what appeared to be a similar low here to the previous one. So I decided that the secondary rally here towards $5 is very likely to break the high, and we're likely to get a third wave of a similar size. So I did pick up one of these pendulum pullbacks as we were leaning on $5. Definitely here the shoulders were starting to give way, so I picked up a pendulum pullback, hung my stop $400 just below the recent lows, and indeed the steep action took me to new highs. I collapsed my risk as the new high formed, and then I was looking for prices here around 515, and ultimately as we slowed down in the afternoon, I decided to back the profit again. 4 handles here, or 4 to 1 to the initial risk of $400 per contract. Really not sure where natural gas is going. It's a fairly volatile proposition, and now that it's back above $5, it could go any amount. We'll see tomorrow morning. The last one we're going to look at, Comex Gold. Unfortunately, the best opportunity here was offered yesterday, right after the CPI number. We were eyeing the bullish positioning here during our live pre-market session, but we usually do not position into significant volatility, which is what the CPI number promised. Indeed, here the compression after the initial volatility died down, resolved bullishly very quickly, took out the overnight highs, and for that matter took out the recent highs here in the mid 1830s. You can see the strong rally. The best opportunity offered after the first wave materialized. Very good measured $400 pullbacks, and then the second one here literally hit this edge here where the bid was soaking up everything that was offered. Great opportunity. We called it in real time. We were projecting well above 1860. This one happened to get just above 1870. You can see great parabolic cascade here on the way up. Beautiful price action if you stayed here for the parabolic. Almost $3,000 per contract in a matter of about an hour. Nothing for me here. Unfortunately, I was not able to take the opportunity during the live class. So that is not something that I'm in the habit of doing. And then towards the end of the session, very similar to the crude oil opportunity, I saw the broadening. It did seem like we took a bit of a dip here, and then price turned. More importantly, we broke minor structure here, showing a bit of fresh interest. So I picked up the pendulum pullback, deciding to see if the pulse market is going to offer more of a mean reverting move. Unlike the oil market, this one did dip back down. I had already collapsed my risk, so I actually got taken out of this one, even though my directional expectation was correct. Such is life. Some opportunities just go like that. This one did move north here, and this morning I was looking at this price action for a potential semicircular wave. This was shaping up just below the recent highs at 1870 from yesterday, and I noticed here that the horizontal base that formed in the in the first hour of the pre-market session did get us back to the top, but the confluence of the horizontal and sloped area here did offer some resistance. So once I saw a shoulder form with a bit of a pivot, I decided to exploit the potential of this round over and this mean reverting move back to the downside. You can see that there was significant open distance below from the overnight action, and since the highs seem to be holding, I decided to see if I'll get a mean reverting move. Unfortunately here the initial collapse held the low, and that immediately puts me into a 50-50 situation, caught into the middle of this range. It seems that we were forming a box at a higher low, suggesting that stair-stepping action with the overall bullish bias might be forming, so I decided to abandon the opportunity. And then a little later during the session, since there was some healthy pressure, I decided to pick up a long. Fortunately, I'm getting dragged behind the bus here as the volatility disappeared during this holiday session, so I'm likely to close this position. Whatever the outcome is, it's pretty much lunch money. We have about half an hour by the end of the session, but I'm likely to close this one and not carry over the risk in this toss-up situation overnight. So we'll see tomorrow morning. I do believe that we'll head for a potential run on 1900, but we focus mostly on intraday trading here, even though we're no strangers to 10 baggers or 10 to 1 opportunities. This is what I've been looking at for the last couple sessions, pretty good outcome, although you clearly see that not all opportunities will play out the way we expect. This is Tape Reading Concepts. Let me know in the comment section below if you like this content or if you have any questions. Like, share, and subscribe. I'll catch you traders in the next one.